Hi everyone, pleased to announce that I have Mary Schruender.
Yep.
She's willing to sit down with us today and talk about mortgage rates. She works with, is it Rate Mortgage now?
Yep, Mary Schruender, Rate Mortgage. Happy to sit with you, Sean, and talk about what rates are doing and whatever you want to talk about here.
Well, I want to talk about mortgage rates. I want to talk about how hard it is to get a mortgage. I'd like to know if somebody doesn't qualify for FHA, are there other packages they can use? Because I run into that a lot, especially with condos. So let's just sort of run through the different packages you offer and what's the market doing today or this week in mortgages.
Yeah, so that's a lot to unpack. Where do you want to start?
Start with where the mortgage rates are and how mortgages are right now.
Yeah, so mortgage rates are in the mid sixes right now, and I absolutely hate to usually quote rates on a video because rates
today is, let's see, it is 10:32 on October 22nd.
Yeah, and the 15-year is in the high fives. That's what rates are doing right now. I hate quoting rates on here though because rates might go down tomorrow and then.
Everybody needs to understand the rates are they're always going up and down, and whether your credit score is 740, 820, 610, that's going to affect your rate.
Absolutely, yep.
Your debt to income ratio, like these are the things I know. She knows way more than I do, trust me. But debt to income ratio, your credit score, your work history, this all comes into fact. So if she quotes and says, hey, you know, we can get a 6.1 or a 5.9, maybe you can't get that, but best case scenario can. So think of these as best case scenario numbers if she puts any numbers out. There, now you're not pinned down to a number.
Perfect, thanks. And every single person's, if they're a first-time home buyer, the rate's a lot of times a lot better. You had mentioned FHA loans. FHA loans are generally for people who have lower credit scores. You can have as low as a 580 credit score, sometimes lower, and still get an FHA mortgage. So it's great for that. 203K loan is great for rehabs.
Is 203K connected to FHA or is it separate?
It's connected to
FHA.
FHA. Yep, okay. FHA 203K loans. Yep. There are many types of first-time homebuyer programs. There's, MassHousing has a great first-time homebuyer program. New Hampshire Housing, if you're in New Hampshire, has a great first-time homebuyer program. The Fannie Mae, Freddie Mac programs or first-time homebuyer programs are excellent right now. If you're a first-time homebuyer and you qualify for those programs. So you sometimes you have to income qualify for certain programs with MassHousing and FHA. You don't need to income qualify for, but the landscape is there's so much going on. Yeah. My cousin, who's a doctor, called me up and he's like, I did a lot of research and I researched maybe 8 hours in this, and I was like, well, you don't need to do that because you're a veteran and you have the VA loan, and that's the best loan there is. So,
It's the singular favorite loan for me. I get a VA loan, somebody comes in, if I'm the listing agent, someone says, we're submitting an offer, it's a VA. A lot of agents are like, I have a VA loan. I'm like, no, I want the VA loan. There's a few more hoops they have to jump through initially, but VA loans, I swear to God, they close like 99.9% of the time. And they're flawless. They go through so easy.
They're amazing. And my family, I come from a family of veterans. My mom and my dad are both veterans. Thanks for your service, Mom and Dad.
I was just going to say, hey, thank your parents for their service for me.
Yeah, and you know what? They're my biggest fans, so they're definitely going to watch this. So,
thank you for your service.
First-time home buyer programs. If you're, a second-time home buyer program, you haven't owned a house in the last 3 years, sometimes you qualify for a first-time home buyer program again.
So you reset so long as you haven't, owned or occupied?
Owned in the last 3 years, yeah. And you can sometimes get a first-time home buyer program, even if there's so many different programs that are available that you can buy a primary residence with 5% down even after you have owned another property. So if you were to buy like a multifamily, a 2 to 4 family house, and then you decided that you want a single family house, then you can buy it with 5% down potentially.
Right, so we got a good background on FHA. Let's say somebody doesn't qualify for FHA or they're looking to buy a condo. The condo complex isn't FHA approved. It seems like 99% of them aren't. What's a great alternative? The first place they should look at?
I'd say Fannie Mae and Freddie Mac is really strong right now, and then MassHousing. Both of those programs are great. Usually when I talk to somebody, I kind of do like a little bit of a fact-finding mission for a pre-approval. What I'll do is I look at their monthly income versus their monthly debt, and then I look to see what they have for a credit score and then see what they have for a down payment. And then based on those numbers, I can kind of figure out how much they can afford. And then I can also kind of check mark off like, okay, they're not going to qualify for this program, they're not going to qualify for this. So it really kind of narrows down what programs we're going to go. We're going to go with the one with the best rate that you qualify for. That
really? You want to get them the
sense.
best rate?
Yeah, it turns out.
Lunatic! What's the market doing right now? So like, I know it changes every single day and every single moment, and the Fed is always sticking their finger into the soup and stirring it up and making it difficult for us sometimes. Where are things right now, and crystal ball, where are they going to be a minute from now, 6 months from now, or what's, best or worst case scenario 6 months from now or a year from now? Because I know a lot of people that are thinking I'm going to do something in the spring. So we're in the fall, everybody always thinks springtime. I personally say you can't know what's going to happen 6 months out, but...
Yeah, I mean, I guess I would kind of go from like a history lesson, like, give a little bit of a history lesson here. So in the 80s, the rates were up around 14%, you know.
Yeah, my mother was at 11.5. She was very proud of herself.
Yeah, and then in 2008, there was the housing crisis, and everybody talks about that. I actually got into business in 2009, and everybody's like, what the heck are you doing?
The house is burning down, I'm gonna buy it.
Yeah, and I was like, I just didn't know any better, so didn't know any better, it was like a great opportunity for me. I was so excited, and everybody's like jumping ship, and I was like getting into it, like, what do you need? So so in 2008, after the housing crisis, there were so many foreclosures, and the Fed decided to stimulate the economy. And between 2008 and 2014, they put in $3.5 trillion into the bond market to help stimulate the economy. After that, they started easing up on their investment. But when COVID happened, everything kind of came to a standstill. And to try to kind of jumpstart spending again, they invested even more money into the bond market. So between 2020 and 2021, they put $4.5 trillion into the housing market to reduce the interest rate. So as far as we remember, since 2008, the rates have artificially been low.
Yeah, I mean, I got lucky. We bought our house, and it was like 2010, 2011, and no points, no nothing. I think it was 3.25, and I think we bought it down to 3.125. That's insane. Like, the rate should never be that low, and that seems to have become, everybody thinks that's the norm.
Yeah, and so a long time ago, I was sitting in an economics class, and they were saying rates should be at about 6%. They are artificially low right now. They should be at 6%, and that would be a healthy economy if the rates were at 6%. And then, so we've had a lot of artificial lowering of the interest rates. So they probably should be around 6%, yeah. And it's not bad if they are. I think that means that the economy is healthy. So.
Yeah, I tell all my clients, like, they're like, I can't afford a house, I can't afford these mortgage payments, and I'm like, it's not the rate that's the problem, it's how much the cost of a house has gone up. I always say the housing cost has increased so much more than income has increased, that 6% rate or that 7% or 5.5% interest rate, it seems high. It's not. Like, I always think that's where the rate should be, because that, like you said, it shows sign of a healthy economy. If you've got a rate down around 3%, there's a reason it's there, and it's usually not a good reason. If you're waiting for the rates to drop that low, you're also gambling that you're not going to have a job, or you're going to be in a financial situation where you can't buy a house. Sure, you can get that low rate, but now you can't buy a house.
There's talk about rates potentially going down next year. If inflation continues to happen, rates might drop a little bit more to try to stimulate the economy. Interest rates shouldn't go very much lower because they don't want to stimulate the inflation again. I think that like where we are, like right around 6% is good. I think that's probably where it should stay. But I guess a lot hinges on the election that's coming up. One of my friends was saying we are seeing a ton of stagnation in our market right now because of people being nervous about the election.
So that's rates, that's where things are, could be, should be. I'm kind of hoping things stay somewhere between 5.5 and 6.5 for the next 5-10 years, and income comes back up and matches the housing prices, and everything just sort of stabilizes.
After the half-point cut, I had so many clients coming to me and saying, hey, how come the interest rates haven't lowered? It was because we had already priced that in. Like,
now, when they say they price it in, do you start doing that 3 weeks before, 6 weeks before? Like, how often does that?
It prices as we get economic data.
Yeah.
Like, so every report that comes out, we reprice because we're assuming what's going to happen in the future. And for instance, October 29th, we have the job opening and labor turnover survey. On October 30th, we have the ADP employment report. On October 31st, we have the personal consumption expenditures. So the personal consumption expenditure, we're going to be looking at, are people spending money? What are they spending money on?
So the rate isn't just determined by the Fed going up and down and affecting the bond. There's like 1,000 different moving pieces that are going to be affected.
Right. Yeah, we have economists, and it's so funny because I listen to Bloomberg radio all the time. Like, that's one of my favorite pastimes when I'm going.
You're very brave.
Well, it's a lot about the bond market.
I know, but I'd be falling asleep while I was driving if I was listening to Bloomberg bond rates.
Yeah, well, when we go and do broker tour, I put that on in the morning just because I want to make sure that if somebody asks me a question about it, I know what's happening today.
See, I just thought you were intelligent and knew that stuff. I didn't know you were cheating and watching.
Oh, I'm totally cheating, yeah. I listen to what other economists have to say.
Yeah.
Or I'm not an economist. You have to listen to what they have to say, and because it affects your clients. Because a lot of times people ask me to do a loan and trying to help them figure out if they should lock right now or if they should float the rate. You can put in a application if you find a house, and you don't have to lock the interest rate immediately. I think that's one of the biggest mistakes that people make is they'll call me like 6 months before they're ready to purchase a house, and they'll say, hey, so what are the rates right now? And they're shopping me against other people, and I'm like, listen, like, this is going to be completely different. At this point, this bank wants to do a special, and then this bank has a special going on a different week, and so it's not like, or like they have more of an appetite. They have bigger, they have deposit balances, and they can invest money because they got these deposit balances, and so they have a little bit of more leeway to give better rates. A lot of times we have some of the best rates available, and so most of the time, honestly, I can usually beat anybody if you come to me.
I know that there's a few lenders I know where they always seem to be a little bit higher than everybody else, and I don't know how they stay in business, but they're always like that quarter point or an eighth of a point higher, and I've never seen them with the lowest rate, but they function, they move right along, and I have no idea how they pull it off.
Yeah, sometimes you just have tried and true clients who will work with you no matter what. But I try to make sure that my clients always have the lowest rate. I always want to make sure that I keep my rates as low as possible, and that's one of the reasons I chose guaranteed rate is because
it's not guaranteed rate anymore.
I asked a few attorney friends who has the best interest rate and who has the best processing, because the processing is important to me and you.
Yeah.
The customer doesn't know the difference between good processing and bad processing, but we sure do, don't we?
Yeah, I'm not going to name any names, but the bank I got my mortgage with, their underwriter was in Florida, their processor was in Kentucky, and the loan originator was here in Andover where I lived. And it almost felt like they were in 5 different time zones and they weren't communicating with each other. And I'll be honest, me and my wife were like best case scenario buyers, loanees.
Yeah.
We were credit scores in the high 7s. We were 20% down with 10% reserve. We both had great work history. We had 0 debt to income. Our debt to income ratio, I think we had like $2,000 in credit card debt, and that was it. We were perfect. And the lender we went with needed 2 extensions. We closed almost 3.5 weeks late because they just couldn't get their paperwork through correctly. So the whole processing side of it is huge.
Yeah, so like I said, I wanted to make sure that I had a really great team that worked for me. So I have a loan coordinator, and all she does is, make sure that my dates get hit on time. She wants to, I want to make sure that, I'm bringing her, I'll bring her a good loan, and then she just makes sure that everything gets done. Commitment dates get done on time, the closing gets done on time. Knock on wood, I have not had any problems with meeting commitment dates. It's usually there a few weeks ahead of time. Like sometimes the realtor will be like, hey, so where's this commitment? It's due today. And I'm like, hey, I sent it to you like 2 weeks ago. And they're like, oh yeah, I just had this on this date on my calendar.
Yeah.
We try to get things out on time and ahead of time, and so that people don't have to worry.
Every week we go out on broker tour, and I run into Mary on broker tour every single week, which I appreciate and love. And she usually brings chocolate. I'm not having any. I'm on a diet. But every week you go out, you always seem to be talking about one program or another program, or what your company's doing to help people be more competitive in their offer. What are you running right now? Like, what's the number one thing for you right now to make a client more competitive?
Yeah, so there's the power bid approval. So if there's somebody who's looking to purchase a house and they've maybe made a few offers on a house and they have not had their offers accepted because, you know, it's such a competitive market out there, one of the things that we can do to help the client is to have them have a fully underwritten approval. It's not free. You have to pay a little fee that goes toward the application fee later on, so we can pay our underwriter for the time that they're actually putting into it. But it actually makes it so that the client is able to waive commitment, have a much stronger offer. They're able to compete better against cash buyers. So that is a really cool program.
Can
that
it
we
close
have right
faster? So normally, like if somebody's putting a loan, I'm looking at like 35 days to 45 days, sort of depending on the lender and the package.
Yeah.
If they're pre-underwrit, how quickly can they close?
Well, it depends on the appraisal, really.
Yeah.
Yeah. So I mean, we're kind of.
If the appraisal doesn't happen for 2 weeks, you're hung up waiting on that.
Yeah.
So let's assume appraisal happens that first 7 days. Let's just say they get in quick.
We can close in as little as 14 days, but we can do that anyway. I mean, we can get the underwriting done extremely quickly. So getting that isn't going to impact the quick time frame that we can still close in. So sometimes if there's like a little bit more of a complicated situation, somebody's self-employed with a bunch of different tax returns, like we might need a little bit more time. But just for the most part, if they're W-2 employees, like they'll fly through. That brings me to another one that we have, which is same-day mortgage. The same-day mortgage is if you get us your paperwork within 8 hours, we'll give you a commitment within 24 hours.
You're not getting the mortgage in 24 hours, you're getting the
commitment.
The commitment in 24 hours.
Yeah. As soon as somebody puts in an application, then there's a waiting period, and then there's a waiting period before
it's that whole
the
TRID
closing,
and the notification timeline. If you're getting a mortgage, the lender has to, is it 3 days or?
Yeah, so we have to get closing disclosure to you with 3 days beforehand, so.
And the seller has to sign off on it?
Yeah, they have to sign it, and...
What's the timeline for them to sign it? Like if they receive it on a Monday, for us to still be able to close on Wednesday or Thursday, say, when do they have to sign it and get it back to you by so they can still close on that Thursday?
Same day.
So same day. So the day they get it, if they send it back to you that same day...
Yeah. But they've had plenty of opportunity to look at this paperwork because we've updated them with the paperwork the entire time. We give them the paperwork at the beginning. There can be some small changes, like if we update the interest rate, or somebody hasn't locked in an interest rate, I put in like a fake one just to like a placeholder, and then they lock in an interest rate, then we're going to update the document. So they're going to be able to see the loan estimate the entire time, and it's going to be updated every single time something changes. Closing costs, we can't have a discrepancy in the closing costs.
Right. They're fixed numbers?
Yeah, well, not fixed. Like our fee can't change. So we charge a fee, and that can't change between the time you put it in and the closing.
Right.
That's a no-no. And then there's some other things, like recently, like condo associations have been charging for condo disclosures.
Yeah, I'm 13 years in real estate. The first year I got in, everybody gave me the condo docs for free.
Condo docs, yeah.
And then somewhere about 2 or 3 years in, then it was like they're $50. Then they were $75. There are property management companies out there, they'll charge us $275, $375 for documents that are just online, that they just hit send and forward them over to us.
Right, so this is a fee that
drives me nuts, by the way. You need to fire those companies.
So we have to disclose that might be a fee up front. Yep. So we'll put in $475 because some people charge that. And then if it's less than that, we don't charge it. So there would be a revision down. But we need to make sure that like the fees that we say are going to be there, like we kind of give you a breakdown of what you're going to need to bring to closing, what all the costs are going to be, let you know what the attorney is going to cost. The attorney charges a separate thing from us, but we still have to say what the total cost will be approximately from them.
So we went off on a little bit of a tangent there,
Sorry.
and that happens. So we were talking about the different programs that you are targeting home right now. So is there any, do we need to track back onto that, or did we cover it?
I think we already basically said so MassHousing, New Hampshire Housing. There's some down payment assistance programs through MassHousing that we have. We have FHA, first time home buyer programs through Fannie Mae and Freddie Mac. So those are some of the best ones right now. But we also do have some other programs that can be helpful. Like we have the bank statement programs for the self-employed people, so we can look at what their income is on their bank statement as opposed to looking at what their income is that they have on their taxes, because self-employed people sometimes they have a lot of expenses. So yeah, but just that, and then I think that there's something for everybody, and I don't mind talking to anybody about what your situation is, and even if you're not ready right now, if you're going to be ready in a year, 2 years, if you want to just kind of see what's happening with your credit, how much money you should save. I don't mind doing like a pre-qualification for people and just kind of setting them up on the right path, because that happens a lot, where I'll set people up. You can afford $100,000 right now, but next year you're going to be getting that raise. And next year, when you pay down this car, you're going to be able to afford $200,000. And maybe if you add somebody else on, you can afford like $300,000. Sometimes it takes a little bit of time to.
So are you helping them with their credit score by doing that, or is that something different?
So I'm not a credit specialist, but I do see people's credit reports, and we do have a what if simulator that says if you do this, then your credit score should change to this. So yeah, occasionally people have issues with their credit, and I'll help them out with putting them in touch with the right people to help them get their credit better.
So if you can't help them, you can at least put them in touch with someone who can, because a lot of people come to me looking for how do I clean up my credit, and I'm like, pay your bills, and that's basically all I've got, but I know there's so much more to it. So you have specialists that you can send them to.
Yeah. Credit is one of the biggest things. A lot of times I'll have clients that'll be like, oh, I closed out this credit card. I got pissed at them. And I'm like, no, never close out your credit card. If you want to really punish them, pay it down and put it in a drawer and, never use it again, but don't close it out.
Well, I had one cancel me because I hadn't used the card in 10 years. They closed the card out.
Yeah.
I didn't know they could do that.
Yeah.
So I'm like, I've had this card for 20 years. That helps my credit score because I no longer have this line of credit. And then I went to use it, and it was dead. And I'm like calling them up. They're like, no, we got rid of you.
Yeah.
So I think you have to at least dip your toe into that well every once in a while.
Yeah, and it's nice to have long lines of credit. The longer the lines of credit, the better it looks for you. Length of credit is great.
If you've got 10 credit cards and 3 of them are 3 years old and 3 of them are 20 years old, keep the 20-year-old ones if you want to get rid of some, and get rid of the 3-year-old ones.
Yeah, I wouldn't get rid of any of them.
You wouldn't? Doesn't matter how many credit cards you have.
Don't get rid of them. Just don't use them.
Just don't use them.
Yeah.
Yep. God, that seems so scary to me. Just having all that credit right there in front of me.
I know, but it's actually good. If you have, the more credit you have available to you, the better it looks. They want to see that you have, $20,000 available, but you're only using a small amount. You're not supposed to use more than about 30% of what your credit limit is. So like if you have a credit card for $10,000 and you don't want to spend more than $3,000 on that ever.
Spend $10,000, but don't carry more than $3,000 of debt.
You don't want to, it depends on what type of card you have. Some credit cards will not report if there's a high balance on it, but they don't like high balances. You want to keep it down to under 30% of the credit line. So
if you've got 10 credit cards, each with $10,000 of credit line, and you've got no debt on it, you're not using any of them, the bank would rather see that, even though they know that once I buy the house, I'm going to start spending all that money to fix the house up and could potentially go deeper into debt. Like, to me, that seems like a gamble on the bank side.
Yeah, but that's what your credit score is all about, is your willingness to pay. Basically, like any credit card you have, you want to make sure you don't spend more than 30% of that credit limit. So if you have 3 cards, it would be better to spend a little on this one, a little on this one, a little on this one. And generally, it's good to use the cards. You want to go buy a cup of coffee and then pay it back, or like buy a tank of gas. And sometimes it even helps to have like a little bit left over from one month to the next, so that you are using it. Because the credit bureaus will report on like a certain day of the month. Let's say it's the 15th, and if you have a balance out on the 15th, then it shows that you're using it. You want to show that you're using it.
So does it help your credit score if you use the card, or does it help your credit score just having the card?
You do want to show that you're using it. Yes. Yeah, I mean that it does help to show that you are borrowing and then actively paying it back. If you have decent credit, you don't have to worry about it too much. But if you don't have very many credit lines, usually you want at least 3 lines of credit open for at least a year before you can purchase a house. And then sometimes if somebody doesn't have credit, we can do a thing called alternate credit. Like I run into this all the time with people who are tradesmen. They don't believe in getting credit cards.
Yeah.
So they'll not have any credit. They'll have a no credit score on any of the credit bureaus. And I'm like, how do you survive not having any credit score? How does this even happen? But then we can do a non-traditional credit for them. So if they have a housing payment for the last 12 months and we can show it, like, they have like a lease or they're making payments out of their account, it's hard to show cash. Sometimes they just deal in
the
cash.
government has made cash difficult.
And if you have like a cell phone bill, some other recurring payments.
Now, does this hurt their interest rate then? Because if they don't have a traditional credit score, and are they paying a higher interest rate when they do that?
Usually we'll just put like there's in the guidelines it'll say what the credit score should be if they don't have a credit score. Like if we were able to get all of these things and all of these like their cell phone bill is in good standing, and then we're gonna just give them like a decent credit score. It's not gonna be great. So it will impact the interest rate just a little bit, but maybe not that much.
All right. Mary, you are a wealth of information.
Thanks. And I know even more, so.
Well, we can keep going if you'd like. I got nothing but time today. Mary, I appreciate you coming to meet with us today, and look forward to seeing you on Caravan on Thursday.
Yeah, sounds great.